Hey guys, what up? Okay, in this video I want to talk about pullbacks. But I talked about pullbacks before. I don't know, but we had this flags, bear flags, bull flags, and I want to talk about statistics. In last video I talked about probability and trading equation and variables, and I mentioned that we have generally two variables. The first one we consider as risk to reward ratio, and the other one is probability. But what about probability? For example, if we have this trend, and as you know, in trend we have several pullbacks between each legs. If we have, for example, 30% pullback, is that trend line and this bear trend is still legit or not? And then we can conclude that okay, there is something going on and we have to prepare ourselves for trend resumption. Basically, if the pullback is less than 50%, the probability of this trend, that this trend is still bear trend, and we're not gonna have trading range, or neither trading range nor trend reversal, major trend reversal, is still legit, and we stick with this perception that this is still is a bear trend. So if pullback is less than or equal 50% of the leg, it's still legit. But if it's more than 50%, if we have a pullback which is 50%, more than 50% of its leg, we have to be more cautious, and it's not that legit anymore, and we can expect to see a trend reversal or trading range. Okay, so let's see it in example. For example, if I put a Fibonacci here, it will show me that okay, we have a pullback. Definitely we have a pause in this trend, but how high is that? How big is this pullback? It's just 23% Fibonacci, if you consider that. So it's so when you see this, it's around the shape. When you see this, you conclude that okay, bulls, they're not strong enough, they're just this pause, and after that we can expect to see a breakout below this. But I have to add something. When you have this endless pullback, this long pullback, it's actually after a while you have 50% chance of breakout from each side. Anyway, what about this leg? if I put Fibonacci, it's still 23% pullback. So our assumption is still untouched and legit. We can rely on that. What about this? Okay, now we have a bigger pullback. If you consider, if you consider all of this, let me erase this shit. If you consider these two legs as one leg, and this one is the pullback more than 50%, it doesn't mean that it's gonna reverse instantly. We call this pullbacks reversal, but they are minor reversals, and when it leads to a trend reversal, we call it major trend reversal. It's not minor. We call it breakout in that case. What about this one? Yes, more than 50% pullback. This is your leg, and this one is your pullback. And you can see, you can conclude from the depth of the pullbacks and the destination between these bottoms, you can conclude that okay, it's getting weaker and weaker. And the last one, this one, if we have this breakout here, so we can conclude that. And also we have this double bottom. They are all signals and sign of trend changing direction of the trend. And as you can see, if you consider this as your leg, as your trend, and this one would be your pullback, or this one, even this one, you don't consider it as a bear trend anymore. And here we also have this support area, whatever. Let's check out another example. Another example. For example, here let's measure this one. It's actually hard, but if you consider this as the major trend and this one as your pullback and correction, you see there is a 50% pullback here, and comparing to this, it's normal if you have a 50% pullback. But what about here? Here we have second leg, but this time we have when you see price at this point, when you see price higher than 50% Fibonacci, you have to doubt about it, and you have to ask yourself, is it still legit or not? And when you see price at this, when you see a chart, when you see trend at this price, you have to doubt about it, and when it goes higher, you have to change your you want to change your assumption, and yeah, you might have a trend reversal like this, or I don't know, trading range, something like that. Another example. Okay, here we have another example. This leg, yeah, it's a big reversal, but you have to this bear trend. But at this point, it's not still a bear trend, because we just had a breakout, and it's still in a bull trend. You have to consider this, and your bear trend started at this point. This is your first leg, which is good looking, and without any pullbacks between these bars. And this pullback, it's eligible. It's a 38 pullback, which is decent. And your second leg, it's hard to say actually what's your second leg. If I consider this one as the first leg and this one as your second leg, yeah, it's still 38. But what about this one, this candle? It's more than 50%. Yeah, I actually doubt about trend. Let's look at it in higher time frame. Okay, in this time frame, I think it's better. Yeah, you can consider this. These are your legs, and this one, every any lower low could be your leg, whatever. This one, this is a pullback, this one's a leg, this one couldn't be, I'm not sure about that, but this one is a leg. And but you can also consider all of this as your first leg, and this as a pullback. You know, some charts like this one, they're kind of weird, and if you measure this, it's a 50% pullback, which is normal. But if you measure each of these legs inside this major leg, you can realize that if your trend is legit or not. Here we have some kind of a wedge pattern after this strong badass breakout, and you can consider this as first leg after this pullback. Let me erase all of this, it's a mess. I don't want to make you confused. Okay, the problem is we have this weird pullback here. It's not a pullback, it was kind of a wedge pattern, which we expected to see it. We expected to see a bull breakout, but it didn't happen, and it's a fake pattern. You know, when we have this wedge bottom, we expect to see bull breakout, but it didn't happen, and that's why it looks weird. But if you just consider this one, here we had this bull trend, bull channel, and as we expected, from a bull channel, we expect to see a bear breakout, and it did happen. And you can also consider this as a leg, as your first leg maybe, and this one as your second leg. You see, this is more weak than this one, and the reason for this, why we see pullback, or why we see trading range after this strong breakout, is that okay, these traders, these institutions who took this trade and this position, now they start to reduce their size, and they become more cautious about it because they don't want to lose their profit. That's why you see this weakness in trend. And you can consider this one as a wedge, this, or channel or trading range in lower time frame, and we may see a trend reversal at this point from this area, at this area. And if you look at it in higher time frame, and set a Fibonacci, you can see at this level, 38 level, you have this support area, and it may get back at this level and have a reversal, create a reversal, make a reversal. Okay, this example is supposed to be about probability. And what about the probability? Obviously we had more probability here than here, so but you can, and the probability of bull breakout at this point was more than bear breakout, but it didn't happen. There's if I'm not wrong, 75% of bull breakout from bear channel, and there's just 25% chance of bear breakout of bear channel, but that 25% happened, and yeah, what do you want to do about it? Another example of pullbacks, if you consider all of this as a pullback, let me erase all of this shit. Here, if you consider this as a leg, as your leg, and this one as your pullback, you could conclude that okay, it's this this pullback is a large one and it's a big one, and I can expect to see another leg up, and I also have a broken trend line, so you can use all of this confirmations, and when you see this strong breakout, I'm sure in higher time frame it's one single candle. Yeah, it's one candle, and after that we had good follow-throughs. I prefer to consider this, all of this as a one leg, and this one is as the second leg, and this as a pullback. It's more obvious because we had this fake pattern. It's confusing to count the legs. Okay, we can consider this one as the first leg and this as the second leg, third one, fourth, and I don't know, does this one count? And this one is a leg, and this here also is a leg. There's I want to finish this video with an extra point about trading range. It doesn't have anything to do with this concept we discussed. Yeah, it has a lot of things to do with this. Sorry. About probability, I have to add something else, which is in trading range. We talked about probability in trend line, as you know, we have two phrases in market, and market is either in trend or in a trading range. We talked about trading range. In trading range we have pullbacks, and if you wanna see if you wanna realize, and if you wanna find out that about the probability of your trend, and if it's valid, if it is still valid or not, you have to measure the pullbacks, and if you have a pullback under 50%, is smaller than 50% of that leg, your trend is still legit. But if it crosses the 50% Fibonacci, you have to doubt about it, and you may see trading range, you may see trend in a trading range, or a change in direction. But in trading range, how do we measure this? Generally, as you know, in trading range we have we have top, bottom, and this middle line, and in half top of this trading range, the probability of making money for bulls is larger than bears, it's more greater than bears. Why is that? For example, if you had price below this line and then a breakout above this level, it's more likely that you see the price at this top. So the probability is in favor of bulls. But if you have a bear leg and breakout below this middle line, the probability is in favor of bears, because you can take short position and take a short position, and it's more easy for bears to make money. So in half bottom of this trading range, the probability of is in favor of bears. So let me show it with different color. Yeah, I show it with red. Here there is more probability for bears, and here at this half top there's more probability of a profitable trade for bulls. Okay, I hope you enjoyed this video, and if you have any suggestion you can share it with me. Goodbye.